Hey traders, Raghee here, and in this video we're going to cover the open and talk about some of the unique factors that we ran into, not just the gap, but a couple different ways that we measure the gap and different daily factors that influenced our trades. Now yesterday I talked about daily patterns that tend to influence our day trades, and today I'm going to show you how that worked today on our NASDAQ, Dow, and S&P buys. So let's talk about the importance of these patterns. So the first thing is, they're not traditional patterns in that we're looking for a Japanese candlestick pattern. They're simply patterns. When I say the word pattern, I'm looking for price to reach certain levels. And yes, sometimes I'm looking for an outside day or an inside day or a minor low. I think we have the beginning of what could be a minor low, but let's look at some of the levels that we ran into. This green line right here is the September value area low. Having hit this level, and by the way, now twice, this was support, and it gave me more confidence to take the long side of the trade, as did the fact that we gapped down. The gap down itself, the fade that it entices, is yet another reason to be bullish. So the gap down. Now, there's a couple ways you can look at gaps. I look at them specifically in two ways. One, did we open below the previous session's cash close? And two, did we gap down below, open below the previous session's regular trading hours low? That's the gap down that we saw today. And it did take a little bit longer for the market to fade. And typically, we will see a fade sometimes within the first 5 minutes. Now, what do I mean by fade? I mean that the gap down is bought. Okay, so let's take a look at the ES, and again, break down the daily time frame, following through on yesterday's conversation about the importance of daily time frames to intraday trades. This right here is a formidable level. This was an easy, let's have bullish directional bias in the S&P. In fact, the S&P this morning was the very first trade that we alerted in the chat room. And this is the 2020 point of control right there. So that is the level that we have seen the most volume at the entire year. So unlike the NASDAQ that hit the value area low for this month of September, this S&P hit the point of control for this year. Massive support and 3,200 major psychological level to boot. So it was very simple to say, we've got a gap down, meeting the criteria. We have a daily, if you want to call it pattern or call it level, let's not get hung up on the terminology, but the daily is cluing us into the kind of trade we want to focus on, and that is what got us long the S&P. Just for the bearings, we got an aggressive setup at 32.29. Sorry, not 32.29. That was our first target. Aggressive. Actually, no. 32.29 was the first aggressive entry, and the second entry, the moderate entry, was 32.16. I had a third entry at 3,200 in case we did go down there. So 32.16 was our moderate entry, and also the entry that retraced back into the Fibonacci zone of the clearing range. So a very good and really a staple of the kind of trading that I like to do, with this zone right in here being hit. So that's the morning, but a lot of what we did was predicated on the bullishness of the daily time frame, the levels that we hit, and what I think is a minor low that we'll probably see going into Friday and then Monday. I'll see you in the next update.